What up, what up, what up? Thank you for tuning back in to Listening Pleasure. I'm your host, the one, the only Rob G.
I promise you one day it ain't gonna be our little podcast. It's gonna be a conglomerate.
And also it brings it full circle. If you go into it and buy a property with a family member.
Welcome. Thank you for tuning back in to Listening Pleasure. Today is a special episode. You ever looked at the stock market and you felt like completely lost? Well, you're not alone. Welcome to Listening Pleasure. As we said, this is the place where we're going to break down the trading one step at a time. I'm your host, Rob G. We got a special guest, as you see. And like I said today, we break it down everything you need to know excuse me, to place your very first trade with confidence on to the next step. So today we got my main man, Shorty Mac Tubb in the building. What's happening?
What's going on, man? Long time.
Ain't nothing much cooling, brother. Long time, man. We're waiting to get you on, man. Yes, sir, man. We're telling everybody we got the trading episode we've been waiting to jump off with, man. So we definitely gonna get into it. I'm gonna let you do your thing. Tell the people what you got going on.
Start off, I got to get a disclaimer. This is not any kind of financial advice. I don't have any certification. It's just an intro to trading. As far as my trading journey, I started about 2017, dibbling and dabbling with Forex, and I had some ups and downs and some stops and starts, but as far as fast forward it, once you get into something like this, you want to, kind of check yourself and see where you are mentally and how you are just, as a person. But day trading is something that you can do any time of the day, no matter what kind of schedule you got. And it's a way that you can supplement your income, or you could make it your full-time income. But as far as getting into it, some of the main things you want to know, you do your own research as always, but some of the main things you want to understand and know is the different instruments. You want to know the different markets, and you want to get familiar with the different brokers, because that'll all play into your style of trading that you pick up, and it'll play into the times of day you want to trade, how much money you want to invest, things like that. So I just talk about it's like, what you want me to talk? You want to talk about stuff like what's going on now, or you want to just jump right into it? The market going crazy right now. That's all, what I'm saying.
I figure, yeah, that's a good point. Yeah, I figure you get into it and you go, or however you feel, you ride that rodeo, how you do it. Like if you feel like you come across something you want to address that's different now, or however you feel, it's your show. Yeah, I'm just here. I'm trying to learn.
No, that's what I appreciate it, because I feel like this is something that different demographics and cultures, they already adapt to it. You know what I'm saying? They start their children young, and it becomes, that's how you get family trust, and they build wealth. And
correct.
So I just feel like it's some information that it can be taken and benefit a whole generation. Our generation, you get what I'm saying? You know what I'm saying? Without playing no cards. But the first thing you want to do, you want to get your finances together. If you're working, I would get a comfortable amount of money that you'll be comfortable, because the hardest thing is changing your mindset and getting used to losing money. You're not really losing money, but it's part of your business expense. It's like if you would have a business or a building, you got to keep the lights on. You know what I'm saying? You got to pay for marketing. So you got expenses that come with the whole trading as far as day trade. You got data fees. You've got a margin that you have to meet with certain brokers depending on what you want to trade. You have just regular stuff that's already probably you got going, like internet bill and stuff like that. But you have to figure that out as far as your budget. And I'm saying this because you don't want to get into this with a mindset of lack, like, oh, I gotta get this, I gotta make this money, because you going into it the wrong way. It's a long-term thing. It's not a sample size. It's like you want to look at it like quarterly. You want to look at trading as a quarterly thing. Like, how do you do over 3 months? Not how you do over a week. You know what I'm saying? Because you can have a good week, you can have a bad week. But that's what risk management comes in. But just to get to different instruments and markets, you have markets like Forex, where that's basically you trading international dollars versus each other. You might have like USD, JPY, USD, GBP, Euro, USD. That market, I don't mess with that market and those instruments because, for one, they're not really regulated all that heavily, and they can easily be regulated by the brokers. And they had a lot of problems over the years with that. So I trade futures. Now, when you trade futures, the best example I can give of trading futures is if you have, let's say you got a farmer and they trading corn. I'm not trading corn. They grow corn. And let's say gas prices go up, oil prices go up, or whatever. So what they would do to hedge that hike in the oil prices or gas, whatever any kind of thing would affect their overall production, they would get into the futures market and hedge that. So they would not bet, but they would put in trades and hedge against any kind of losses they would take from, that hike in the oil. They may go trade higher with their corn, or they may go with the trend of the oil going up, because that's the beauty of futures is you can make money if the market is going up or down. You can trade corn, you can trade soybeans, you can trade oil, you can trade gold, you can trade silver, you can trade copper. But what I mainly trade is NASDAQ 100 and the S&P 500, because they both instruments, and that's a financial instrument. I can't think of the name right now, but I'll put it up there on the screen. But you want to be able to use the two. It's really three. The Dow Jones also, they all correlate with each other. But I don't flip-flop back and forth because I don't want to have too much going on. Because you want to get to the point where everything becomes a reflex. When you get the technical side together and you understand your technicals and you got a model that you're gonna trade, when this does this, I'm gonna do that. You want it to be a reflex, so you're not, just bam, hitting the button mouse all day and you're frustrated. Then you got to go outside. You got to take trash out. You dropping stuff on your clothes. You know what I'm saying? You just starting a cycle that you don't want to go into the next day with.
Facts.
So, but futures. And you can also, and as far as markets, you have options also. Options is more, you have a higher margin. When I speak about margin, that's the amount of money that a broker wants you to have in your account to be able to absorb losses. As far as there's what they got, their guidelines and everything. Options has a higher margin requirement. Futures, a lot of brokerage, you could get in with $50. You know what I'm saying? You can get in with $50 on certain brokerages, $500, on certain brokerages. And that's like, you can trade a contract on futures that's $2, So every point, let's say NASDAQ is 46,000, I don't know what it is right now, whatever it is, $26,000 a share. They're $24,000 a share right now. So if you were to get in that and you were to put a position in, you could be $2 every dollar it moves, or it would be $20, or it could be $6. Again, this goes back to what it's all based on what you were able to start with. But you get your model down right, you could easily compound an account way faster than a CD, way faster than any kind of interest you can gain. If once you get settled in and you understand it. It took me a long time to understand that it wasn't nobody but me with the problem. You know what I'm saying? It wasn't about like, oh man, this nigga Trump, he talking. No, I want him to talk down because then I can see where the market's going and then I can adjust. Again, it goes back to you because the market's gonna reflect you because the market do the same thing every day. It opens, it creates a high or a low, and it closes. So you want to watch the open, you want to get in when that high or low finishes creating itself. Mm-hmm. And you want to take the bulk of the movement, but that's a whole nother. That's later on in the segment. So I kind of cover what futures was. I'm gonna share this futures calculator to give you an idea of what I was talking about as far as the one thing that scares people away from trading is they don't want to lose any money, right? But you can combat that. You don't have to lose no money unless you want to.
So I was gonna ask this while you bringing up the calculator. Right. So like I said, I'm learning as we going. So like because when I was talking to somebody, they did ask this and that. I was like, good question. So what's basically the difference between like trading and investing? Is it the same thing, like trading or an investment?
Well, investments are more like stocks, bonds. You know what I'm saying? Okay. Stuff like that. When you invest, you are investing, looking for an upside on that investment. You're looking for, So let's say you do buy a S&P, a share S&P at $6,000. Mm-hmm. Cool, everything jumping, going up right now. That's cool. But if you don't know how to read a chart, you don't know when to get out. So then the question is, how long are you able to sustain? Because it's about to drop. But how long is it you'll be able to sustain when it falls? I'm gonna get out because it's dropping. And then, that's an investment. As far as, you said what's the difference between investing and trading, right?
Yeah,
So when you're trading, like when you trading futures, or even when you trading options is what Warren Buffett, that's how he got rich. That's a whole nother story. But when you trade, we'll stick to futures. When you trade futures, it's basically you buying a contract that's set at a future price to be, bought back or sold at. So what ends up my bad, did I mess up now?
No, that's me.
What happens is you got two people buying the same contract at the same time. One person is banking that the contract that the price will rise. The other person is banking that the contract is going to drop. So let's say we get in and we put in let's do this right here. Let's add that. Let's say we get in long right here. Oh, 25 contract. That boy, somebody got some money. Let's do one contract. Okay. And let's say we're going long right here. And let's say that we get in at a price at right here, 25,087, right? Mm-hmm. So this plays in with the risk management. This stop loss right here is basically another entry and another not a contract, but it's another entry as to where you don't want to see this price go below this 25.57, which is 30 points below your entry price. Correct. So if you had and you want let's say your profit 100 points, I try to get anywhere from 50 to 100 points on a trade, and that happens real fast on NASDAQ. All right, this is micro. This is when I was telling you about $2, right?
Mm-hmm.
So this is $2. This is a $2 contract. If you look over here, it's telling you the point value is 1. I don't know why that's like that, but you can see right here, you're risking $30 to make $100. We're still talking this. This is still in your question about trading.
Yeah.
So now, if you were to buy a stock, you don't have any kind of stop loss. You know what I'm saying? You don't have no way to be like, oh, all right, that's cool. I lost that. You might lose $30. You might say, well, I'm gonna hold on to it. You might lose $60. You might, but it's a different ballgame. And as far as investing stocks, you have to go through a different brokerage than you would. And you know what I'm saying, on trading, you would have to, like I said, have different margins. You could trade options on these indexes. That's what they call these indexes. That's just, you can trade, and the margin is low. It's called a span margin. But as far as trading, for me, and I think for like regular people, they call it retail trading. I think this is the best. When you get on the charts, let's say you get in and you went like 10 minutes into the trade, and it gets above, and you get up to $50 profit. You see, I done made $50, which would be 25. It could be about 20 points. It would be $40 with $2. So you could take this number right here, and you can move it up above your entry price and lock in profit. You don't have to leave your stop loss 30 points underneath your entry price. So for anybody that's worried about losing money, that's a stop. That's one way to alleviate that right there. Because if even you get up $20, you say, all right, I don't want to lose no money. But I'm if anything, worst come to worst, I'm gonna make $20. So you can move that stop loss up above your entry price. You know what I'm saying? And that's when you get in. That's called that's not scalping, but that's you locking in. You know what I'm saying? You locking in profits, because if you think about it, like I said earlier, at the end of the day, you got other expenses you want to take care of. You can do that while you're trading. So if price never comes back down, cool. You made $100. You know what I'm saying? And
so when it comes back down, it don't go never below that stop loss number.
Right, and the trade it'll cut off. That's why, like, if it goes back down and you done moved it 10 points above it, you'll make $20. And the trade will be out. All the entries, all the orders are closed. They call you got a stop loss order, a limit order, a market entry order. You can set a limit order. I'm kind of moving ahead, but you can set a limit order if you don't know when to get in and you think, oh, this price is going to touch this and then go up, or it's going to touch up and go down. You could do that. That's a safe way to keep yourself, from going